Hey there, moneymakers! Welcome back to the channel where we break down everything about finance to make sure you stay ahead of the game. Today, we're talking about a question that's been asked for decades: pension versus 401k. What's the difference? And more importantly, which one should you be working for? Now, I know what you're thinking. Isn't this the same thing? Spoiler alert. Not even close. Stick around and let's break it down. But before we jump in, I've got a little homework assignment for you. Make sure you like this video, subscribe if you haven't already, and hit that notification bell. That way you'll never miss a chance to learn more about your finances, and who knows, you might even end up with a fatter bank account. Oh, and don't forget to comment below, which one are you working for? A pension, or are you all about that 401k? We want to know. And share this video with anyone who's still scratching their head about their retirement options. All right, let's start with the classic, the pension. A pension is a defined benefit plan, which means your employer promises you a certain amount of money every month after you retire. This is like that old school, till death do us part kind of relationship with your employer, except it's your retirement fund, and it lasts for the rest of your life. Think of it like an old friend who promises you a nice monthly check after you've both been through thick and thin. Sounds cozy, right? But wait, there are some catches here, and we'll get into that. With a pension, the amount you get paid is typically based on things like your salary and how long you've worked for the company. The formula can vary, but a simple example would be, I'll pay you X% of your final salary for the rest of your life once you retire. Imagine you're at your company for 30 years. You retire and you get a nice check every month. It's like winning the retirement lottery. But you're tied to that company. If you leave the job before a certain period, you might lose your pension benefits. And you know what they say, leaving your pension behind is like giving up a lifetime of free cookies. Not ideal, right? Now, the pros of pensions are clear security. You get a guaranteed monthly income in retirement, and if you work for the company long enough, it's basically a financial safety net for the rest of your life. But the cons? Well, you're tied to your employer. That pension won't follow you if you change jobs, and in today's world, pensions are harder to come by. Companies don't want to carry the financial risk anymore, so they've started shifting to other options like 401k. Now let's talk about 401k, which are the cool kids on the retirement block. Unlike pensions, 401k is defined contribution plans. In other words, you contribute a certain percentage of your salary into the account, and your employer might match that contribution up to a certain point. Basically, the more you contribute, the more you have to work with when you retire. Think of it like a potluck dinner. You bring a dish, that's your contribution, and your employer brings a dish. That's the matching contribution. The more you both bring to the table, the more food you have to eat when it's time to feast. Just don't forget to bring your dish. That's your responsibility after all. Here's the big difference. With a 401k, the amount you have in your account is determined by how much you contribute and how well your investments perform. You're responsible for making those decisions. If your 401k grows, it's all on you. If it doesn't, well, that's also on you. It's kind of like being the captain of your own retirement ship. Your financial fate is in your hands. If you want to steer towards a cruise to retirement paradise, you'll have to actively manage your contributions and investment choices. Now, the good news about 401ks, they offer flexibility. You can contribute to them even if you switch jobs, and your employer's contribution goes with you as well. Plus, many employers offer matching contributions, which is like free money. It's hard to ignore that kind of opportunity. The downside is that you've got to take charge. No one's watching over your shoulder, making sure you're contributing enough or investing in the right assets. You've got to be proactive about your financial future. Kind of like a gym membership, right? You can pay for it, but if you don't show up and work out, don't expect results. So, which one is better? A pension offers some distinct advantages and disadvantages. On the plus side, it provides a steady guaranteed income for life. You can relax knowing that the income will continue no matter what happens in the market. However, there are some downsides. You're tied to your employer, and if you leave the job too early, you might not get the full benefit. Additionally, pensions are becoming less common in today's job market. Now let's talk about the 401k. One of the biggest pros is flexibility. You can take it with you when you switch jobs, and employers often match contributions. You can control how much you save and invest, and it's easier to roll over if you move jobs. But there are some cons as well. You're responsible for your own investment decisions. If you don't manage it properly, you could end up with less in retirement than you expected. So, think of it this way. A pension is like being handed a lifetime supply of cookies. Pretty sweet if you stick with the company long term. A 401k, on the other hand, is more like being given the ingredients and a recipe. But you've got to bake those cookies yourself and hope they turn out as sweet as you'd hoped. All right, we've covered a lot today, and I hope you're feeling a little more confident about choosing your financial path. Whether you're working toward a pension or contributing to a 401k, both have their pros and cons. The key is knowing what works best for you and taking charge of your future. So now it's your turn. Do you have a pension, or are you all about that 401k life? Let us know in the comments below. And if you found this video helpful, share it with a friend. You know the YouTube algorithm loves when you do that. It helps us out a ton and helps other people get the knowledge they need to make smart decisions for their retirement. Make sure to like, comment and subscribe, and don't forget to hit that bell so you don't miss future videos that'll keep your financial future shining bright. Until next time, stay smart, stay secure, and always work towards your future. See you in the next video.